The gold and silver market, of course, let's talk about that because it's been very volatile, especially silver. One thing I would say, though, is that the price of silver is still trading around 110 in China. The price to buy real silver through the bullion dealers in the US, like SD Bullion, it's still around 100. And I'm not concerned about the volatility in the silver futures market or spot market, which is basically the OTC market traded through the foreign exchange market. It's the COMEX London Axis market. They're pushing that market around a lot, and I think there's also a little bit of Chinese selling of silver because some clever Chinese traders, and I say clever because they've been kind of punished by the regulator there. They're seeing an opportunity here of selling the COMEX Western silver market or even selling silver in China. They see an arbitrage opportunity. So everyone's ganging up against silver. It's a small market, but again, silver is a metal that's really important during wartime. And even if this war were to end in an hour's time from now, the world will still be in conflict, in my opinion. Things won't be peaceful. Pandora's box has been opened. So right now we've got spot gold at 53.08. Yes, it's 6:25 a.m. London time, which is 1:25 a.m. Eastern time. The high overnight has been 53.80 and the low has been 52.78. Silver, yes, the high overnight has been 91.40 and we just traded down to 85.17. That's the other thing. It's moving like a yo-yo, quite a lot of volatility. Right now we're at 86, so down about $3. While the stock market again is under pressure overnight, it might rebound when Treasury and Fed officials get to the office later on today.
Mario says Treasury sold off on war news. Yields rose 10 basis points when they should have dropped. Foreign holders are dumping U.S. debt for gold and silver. Regime change failed. The longer the war, the worse for U.S. finances. Dow/gold ratio near 9. Oil jumped to $72 after Strait of Hormuz closed. Silver, volatile, but physical above $100 in China. Watch Treasuries.
One thing I saw right off the bat early on London time prior to the U.S. opening was that U.S. Treasuries hadn't moved. They didn't rally despite this continuing war. And today we are on the 4th day of the war. It doesn't seem like it's going to end anytime soon. The regime change that was expected after the assassination of Iran's Ayatollah or supreme leader hasn't happened. And I think that's been a big miscalculation for the United States and Israel, for the neocons. And this morning I see that Reuters is reporting that the Prime Minister of Israel is saying that the war against Iran may take some time, but it will not take years. And usually when you say something like that, it means you're concerned, in my opinion. And yeah, I wasn't right about the stock market. They were able to kind of salvage it yesterday, but I think I've been right about the Treasury market. And as I said yesterday, it hadn't moved, and you would have expected with a war raging that there would be flight to safety. But as you can see here from this screenshot I took late yesterday, the Treasury yields, yeah, they look green and up. That's a bad thing. That means the prices are going down, and the market is selling treasuries, well, they're up about 10 basis points across the board. And that's very concerning. You would have expected those yields to be down 10 basis points or even more in lieu of such a big story, such a worrying war. So what is happening here? Well, that's what we're going to look at today. And we're going to look at some charts. So what is happening? Well, what I think is happening is what is euphemistically called asset reallocation, especially by, and I don't know this, but I'm speculating, especially by foreign holders of treasuries. Who possibly would be doing that? Well, I think there's a good chance China is doing this because China is probably not too impressed or not too happy with this war. Yes, it depends a lot on Iran. I think for 20% or so, or it could be a little more of its oil. Well, anyway, it depends a lot on Iran a lot for its oil. And if the Strait of Hormuz remains blocked, like it was announced yesterday by the Iranian officials that they would block it, then that's a problem. So, China could be selling treasuries. The other countries that could be selling treasury, and I've heard from good sources that they are the countries that are being hit really hard by Iran. And I saw yesterday that Saudi Arabia complained that the U.S. wasn't helping them combat the onslaught from Iran, that they were focusing on Israel, and maybe the other countries as well, UAE, Qatar, Bahrain, Kuwait. After all, the petrodollar deal is supposed to be, we buy your treasuries, we buy the dollar, we deal in dollars, and you defend us. So, this is what I'm hearing. They are unwinding their treasuries, and they're buying a lot of gold and silver. Yes, a lot of gold and silver. The other thing that is weighing on treasuries is the fact that we've got a lot of treasuries to be rolled over in 2026. Yes, they've rolled some over already. We are, after all, in the beginning of March. But it's going to be even more pronounced toward the rest of this month and going on for the rest of the year. It's estimated that it's going to be around 9 to 10 trillion that they will need to roll over. And the thing is, unfortunately, we know that the most destructive and expensive activity in human society are wars. And the longer this war goes, the worse it's going to be for the United States. And I think that's one of the reasons why Treasury suffered yesterday. Yields are up 10 basis points instead of being down on safe haven flow. I think Treasuries would have rallied if the strategy of killing the Ayatollah and that leading to a complete collapse of the regime in 24 hours in Iran, Treasuries would have rallied massively. Everything would have been great, but it hasn't happened. And I think it's going to continue, unfortunately, for the United States and its allies. And by allies, I mean Israel, of course. The Dow Gold ratio. And I know the stock market rallied yesterday. The stock market was down fairly significantly, not huge pre-open. But as you can see here, the one thing that's happening, though, that we need to keep in terms of the bigger picture is this asset reallocation. It's not just from treasuries to gold and silver. It's also from the stock market to gold. And as you can see, the Dow gold ratio is approaching 9. It's at 920. It has been lower. It was lower when gold traded up to 5,600 in January. But I think this is going to continue. The other chart I wanted to show you, and I haven't showed you this in a while, this is the price of the 10-year note, Treasury note, in terms of gold. And that shows you that there is this asset reallocation. Yes, it's a monthly chart, but as you can see, the trend is higher. And that is worrying for the U.S. Treasury, for the U.S. government. And again, I'll reiterate, the longer this war goes, the worse it's going to be for Treasuries. And I wouldn't be surprised that, I don't know, in a week or two, if we're still here bombing each other, these three sides, it's going to be a lot worse, and the Fed might have to step in. And what do I mean by that? Well, they might have to cut rates intra-meeting. They might have to announce more QE. Not that I don't think they're already doing it. Just want to go through some of the stories here. Yesterday, late yesterday, London time, Iran's Revolutionary Guards commander says the Strait of Hormuz is closed and Iran will target any ship trying to pass through it. So that was out yesterday. I don't know if Chinese and Russian ships will be exempt, but he says any ship. So that's not good for anyone. What about the oil price? Oil price has been kept kind of under control, even though it's gone up. Well, right now, WTI is at 72.32, and I remember yesterday when the news about the Strait came out, it went from 70 to 72, like in seconds. So we're still holding at that level. The Brent crude price is just below 80. So yes, I watched a lot of analysis about this conflict, and of course I didn't watch CNN or Fox or the mainstream media. I watched people like George Napolitano, the Duran, Glenn Deason, and they had a lot of like reputable people there. Like one guy was a colonel, retired colonel, I think Wilkerson. He was he was the chief of staff for Colin Powell when he was Secretary of Defense. So, and what I've heard from the analysts in these podcasts is that, yes, the longer this drags, the worse it is. And they are concerned that the administration, the Trump administration, doesn't really have a plan. Well, their plan, which I personally think was a bit naive to think that just by killing the Ayatollah that, you know, everything would be honky-dory, that the Iranians would rise up and overthrow their regime. Yeah, I think that was their plan, and it's failed miserably. And here we are in the fourth day. I look here at Treasuries. Well, they're continuing to go up a little bit, not that much. But it's early days. The 10-year yield is up 1 basis point. That's not that much. And the 30 years up another basis point. And I'm quite early today. It's 6:20 a.m. London time. Why is that? Well, I'm going to play golf later on this morning. So I didn't want to miss out on reporting to you what's going on.